Friday. Bitcoin ending the week with a fresh record high. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me now are my co-hosts, CoinDesk Markets Managing Editor Lawrence Lewitinn and Global Macro Editor Emily Parker. Good morning, you two.
Good morning.
Did you have a chance to catch up on those GameStop hearings yesterday?
I absolutely did. It was very entertaining to watch and very relevant to crypto because one of the key themes was the democratization of finance, for better or worse. So I think it's really something that the crypto industry should be paying attention to.
One thing that stuck out to me was Vlad Tenev, the CEO of Robinhood's testimony. He said that big reason why they had to restrict trading was because of the slowness, the flaws in the current financial settlement system, something that digital assets seek to remedy. So speaking of digital assets, we're in that phase where Bitcoin is making weekly, almost daily record highs. Bitcoin today, just before 5:45 in New York, touching $52,954, just shy of $53,000, that psychological barrier. The XBX Bitcoin price trading right now at $52,889, so very close to that record high. And the Ether hitting an all-time high at 1952 Thursday afternoon. The ETX Ether price now trading at 1925. So also very close to that all-time high of Ether, according to Trade Block data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. So Lawrence, what sticks out to you in the markets today?
Well, of course, everybody's watching Bitcoin getting close to the $1 trillion mark, but really check out BNB. That's the Binance Exchange token. It's up 50% today, twice as high as it was last week, about 5 times what it was last month. And that's because of pancakes. Everybody loves pancakes. Well, okay, it's not actual pancakes.
I like
it's
pancakes in the morning.
Swap. Yeah, I mean, who doesn't? And Pancake Swap is what's behind this, though. It's the DeFi project, yet another one named after food, of course. People are eating this one up, and it's another clone of Uniswap. So it runs on, but the thing is, it runs on the Binance Smart Chain, a wrap version of BNB against BUSD, which is the Binance stablecoin. That's the biggest thing that's being traded on this exchange, but everyone should be careful because things that run this high can fall just as fast. And you're playing a game of whack-a-mole, and with pancakes, you could get indigestion. So be careful out there.
Everything's popping. Bitcoin, Ether, DeFi. It's a hot space right now. All right, well, let's head over to Japan, where our first guest is a Japanese financial powerhouse that owns one of the largest crypto exchanges in Japan. Joining us now from Tokyo is Oki Matsumoto, Chief Executive Officer of Monex Group. Welcome, Matsumoto-san.
Thank you.
All right, so in the United States, we see Tesla, we see big banks like BNY Mellon, Morgan Stanley making huge moves into crypto. What do you make of that, and what is happening in Japan?
Well, the retail customers are chasing after bitcoins, but it's not happening with the institutional investors, you see in the States. The Japanese kind of regulation framework is quite kind of behind as regard to providing the safer platform for the institutional investors to buy cryptos. So institutional investors in Japan are very behind, but the retail customers are quite active.
Good morning. It's nice to see you. So just to follow up a little bit on the Japan question, it always seems to me that Japan is one of the most important markets in crypto that people are just not paying enough attention to. According to, I think, CoinHill's data, the yen is the most traded national currency, the second most traded national currency against Bitcoin after the US dollar. So that's a pretty big influence. Do you think Japan is playing, given what you said that it's mostly retail investors, do you think Japan is playing an important role in the recent bull run? Like how, or is it mostly coming from the US?
Well, I think clearly the initial moves started in the States from institutional investors, and of course many retail investors in Japan kind of followed that move And also, by the way, you talked about, GameStop. Japanese retail investors in stock market also reading Reddit and then joined the GameStop, kind of crazy, trading as well. So retail investors are really following what's happening in the States. So I believe that they kind of joined this bull market, but that was initially created in the States, I believe.
When I talked to you a couple years ago, Japan was sort of in a freeze because after the coin check hack, there was a regulatory
Mhm.
crackdown and there just wasn't a lot of action happening in the crypto world. And I remember around that time, you said that this was a short-term thing, and you actually predicted that Japan would eventually become more crypto-friendly than the US. And you said that Japanese retail investors were actually more willing to take risks than US investors. Is that happening? Are we seeing that?
It is happening. Many Japanese retail are jumping into the crypto right now, and also that we may discuss further later, but the Bank of Japan is now working on creating digital JPY. The Beijing is trying to. They have already launched EU1 in Beijing, Wang Fuqin these days in Beijing. And they are trying to introduce the EU1 for the Beijing Olympics, which is happening 1 year from now. And the BOJ seems to be trying to somehow launch something, targeting the kind of same time frame. And if that happens, we will see more huge kind of attention by Japanese retail people into crypto world. So, and also, as you know, the retail holding of Bitcoin in Japan is still very huge. So I think Japan can still play a very important role in the crypto market.
Matsumoto-san, we talked about institutions before, and you said that they are reluctant to get into crypto because of safety issues. Is there any other reason why they would be reluctant than, say, they are in the US besides just finding a good platform? And is that attitude changing at all?
I don't think it's not yet changing. In the States, the OCC is basically paving the kind of environment whereby the banks to custody the crypto, so more institutional investors feel safe, comfortable, coming into the investing into crypto. But in Japan, the trust banks are actually by law prohibited to custody crypto. So it's really behind. So I think that is the biggest reason. In Japan, of course, my company's subsidiary CoinCheck is custodizing the crypto, but I don't imagine, I can't imagine that large institutional investors in Japan would buy Bitcoins and others with custodying those coins in someone like CoinCheck or kind of those exchanges. They do need a
At the
more
same time,
credible, strong custodian.
regulators seem to be more friendly in Japan in terms of, XRP isn't a security. Are they warming up to cryptocurrencies?
Well, that XRP discussion is a totally different thing. Yes, it is. In Japan, XRP is regarded as crypto, not as regarded as security. But that doesn't tell you that Japanese regulators are more friendly to crypto. They were actually most friendly to crypto 3 years ago. But unfortunately, these days, they are a little bit behind to United States.
Just maybe one last question. We see China strongly spearheading its digital yuan project. Is that inspiring Japan to ramp up efforts to create a digital yen?
Yes, BOJ is seriously working on that. BOJ, Bank of Japan, officially announced they will do a POC sometime early this year. So I believe, maybe next month or April, they will start doing, a proof of concept. And, they are very serious. Not only Bank of Japan, but also the government itself are really pushing to promote and prepare the digital JPY.
Excellent.
And you think that the digital yen would be very good for Japan. Is that correct? And why is that so?
Well, I can say two things. Inside Japan, if we have a digital yen, digital JPY, that will increase the interoperability dramatically among the crypto assets like a BTC or XRP, whatever, against JPY. So that will increase the liquidity, and it will end up it will lead to the improving the price as well. So it will be very, very good for the entire crypto kind of the ecosystem in Japan. And the second, I think for Japan to have digital JPY is quite important from economical national security point of view as well. The currently in the regular world, the dollar is dominating, currency, dominating way of doing trade. In cyber community, China seems like trying to create a kind of strong position as regard to the currency in the cyber, world. So for the Japan to create a kind of rival against digital yuan, EU1, I think it's quite important for Japan as well as for other nations as well.
Yes, as neighbors, I can see the innovation and the desire to lead on that front is very strong. Thank you so much, Matsumata-san, for giving us a glimpse onto what's happening in Japan.
Yep.
All right, that was Oki Matsumoto, Chief Executive Officer of Monex Group in Japan. Coming up, Markets Check-In with Torozo Asset Management CIO, Michael Venuto. Welcome back. Checking in on Bitcoin, the XBX Bitcoin price now trading at 52,900, just shy of that 53,000 mark. It's angling toward that all-time high. And the ETX Ether price trading at 1927, also nearing all-time highs. Joining us now to discuss the crypto markets is Torozo Asset Management CIO Michael Venuto in New York. Welcome, Michael.
Good to see all of you.
All right, so we recently passed the 50,000 barrier for Bitcoin. The next milestone for Bitcoin is this trillion market cap. What is the significance of that psychological barrier as gold goes down? Will the Peter Schiffs and Nouriel Rubinis of the world soften up?
Well, I don't think Peter Schiff is ever going to soften up on it. I actually heard him on Clubhouse the other day saying Doge made more sense than Bitcoin, so he's all over the place. But the psychological impact, I think it's actually very good that the price is so high now because it's making people afraid to trade it. I hear all of them, so focused on price, and I've talked in the past about price of Bitcoin being more or less a meme, meaning it gets people excited, but often for the wrong reasons. It prevents them from going down the rabbit hole and really understanding what's going on. Listening to Matsumoto-san, it's very reminiscent of 2017 in the US, what he's describing in Japan today, right? We had retail in with very little infrastructure. over the last 4 years, we've seen so much infrastructure built to allow the institutional investor to come in. And now we're seeing the Salerization. My firm, we run the largest blockchain fund out there, the blockchain ETF, and we're constantly looking for companies doing what Monex is doing and what Bakkt is doing and what Voyager is doing, and to understand how they're making it accessible for the traditional finance world to embrace.
Michael, along those lines, we're seeing a lot higher funding rates for perpetual futures over the past month. How much of this rally is actually based off of leverage versus just straight up spot buying?
Sure. Anytime you have momentum, you're going to have leverage. I also think that a lot of money is already in motion to get to spot, and people are hedging themselves to get them in, because they don't realize how liquid the underlying markets are in the current decentralized Bitcoin blockchain. So I think there is money in motion from large institutions, large public companies that are already in the process of buying. We wrote a piece this week about why Cisco should have it on their balance sheet and stop buying back shares, start buying some BTC. So I think that weird curve is from demand, which, yes, will be levered.
Now, along those lines, of course, why shouldn't they give the money back to the shareholders and let the shareholders buy BTC as they see fit? Why should Cisco, for instance, if they don't have any exposure to Bitcoin, but their liabilities and their payrolls and everything else is in dollar denominations, why don't they either deal with their liabilities or else give it back to the shareholders? Why should they buy Bitcoin?
Great question. Unfortunately, the either or isn't that they're giving it back to the shareholders; they're buying back their own stock.
That's a form of giving it back to the shareholders. It's a form of dividend. It's just buying back. You're buying it back from somebody. You're buying it back from the shareholders. You're giving them cash for it. Why not do that and lower the leverage on the balance sheet?
So the point is they're
Or
a company they're a company that's kind of at the infrastructure phase of blockchain, right? They can make a big impact here. They have cash sitting on their balance sheet that's not doing anything, very similar to what Saylor went through. So why would they take back their stock and reduce float when they could just embrace the decentralization that in the future will probably replace a lot of what they're doing today if they don't get ahead of it? This is like
shareholders.
go ahead. Sorry.
Shouldn't the shareholders decide where it should go? I mean, shouldn't the shareholders then get and buy it if they want it on their balance sheet? Why should they? People don't buy Cisco to buy Bitcoin. They buy Cisco for the infrastructure play.
If they were giving a dividend, I would agree with you. But if they're buying back their stock, they're not giving the shareholder the choice. They're saying to the shareholder, "We think our stock is worth more than it is."
Well, you don't have to sell it to Cisco, and whoever takes it, or you just bid it up, and you're actually adding shareholder value. You're adding value to the shareholder.
I follow you. I would much rather see them embrace the blockchain and the cryptocurrency as a better treasury for them.
All right. Well, good to have the discussion and work through the idea process at least. Thank you so much, Michael, for joining us with your insights.
Thank you.
Thanks, Michael.
All right, that was Torozo Asset Management CIO Michael Venuto in New York. Coming up, a look at the crypto landscape in Hong Kong and checking in with CoinDesk regulatory reporter Nick Day.
I can't think of a more important story than this one to be telling. We're talking about the transformation of money itself. So to tell this story, right, the most significant story in finance that's around, we need new mediums, new ways to reach people, new ways to reach this global audience, the human beings for whom this is going to be most important. So this is why we're really excited to launch CoinDesk TV, because it's another way to reach people. It's another way to communicate. It brings to life the stories that sometimes can be difficult to access. This is a huge opportunity to tell a very, very important story that reaches a wide audience that has the potential to change everything. This is a huge opportunity to do this differently, and CoinDesk TV is going to sit right in the middle of all of that.
Welcome back. Time to check in with CoinDesk regulatory reporter Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello, Nick.
Hey, good morning.
Good morning.
Good morning, Nick. Can you just give us all a TLDR on the GameStop hearing? Like, what was the main takeaway for you?
Yeah, the hearing was 5.5 hours long. I think the big takeaways are really Congress was
That was the
mainly
takeaway.
focusing on.
That was also a mega
Yeah,
live
it was
tweet
a
you
long
did on Twitter. Thank you, Nick.
hundreds of tweets. Yeah, no, it was a good hearing. I think for the most part for the crypto space, a lot of the questions were kind of repetitive, but for as far as the general tone goes, the representatives were really looking at what happened when GameStop suspended trading of GME and other volatile shares. They were looking at how exactly Melvin Capital Management was operating. They looked at how Citadel was operating. There were very few questions. I think the second least number of questions went to Keith Gill, otherwise known as the Roaring Kitty, and the fewest questions went to Reddit CEO Steve Huffman. There were very few questions about what was going on. There were a couple questions about whether or not Reddit was being used to manipulate the stock markets, and whether or not foreign actors were trying to maliciously participate. But by and large, the focus was on the conduct of the actual Wall Street funds and of Robinhood's behavior during the entire volatility period last month.
Yeah, the role of social media and of Reddit specifically was very unclear yesterday, right? Because they were sort of asking questions about it, like, oh, so you were using Reddit, and how are you using Reddit, and who are you talking to, and what were you posting? But nobody seemed to know like exactly where that line of questioning was going, or if it was good or bad. And I think it seems like something we're going to see. We're going to see more of this, right? And this seems like, in my view, what could most directly impact the crypto world, because we're seeing people use social media to pump crypto daily, right? So I think that, I don't know, did you have a different takeaway from that?
No, that seems right to me. It's there were a couple questions about there was one line of questioning about whether or not Keith Gill was interacting with like a specific group of people on Reddit, and
Right.
Reddit's the forum.
He was like, I'm just posting on Reddit. Yeah.
Yeah, exactly. So
It's not like a
as far
group
as
chat.
business
Yeah.
is concerned, like it's like are you posting stuff on Reddit about how you think this token's good and might appreciate in value? And that's very different from like going in a Telegram group and coordinating like a pump and dump or something. So yeah, I think that's probably like the biggest
Or
takeaway
like,
for the
is it different enough, right? That's the question, right? I think
Right.
that's where they're having trouble drawing the distinction. Like, what makes it different, or is it, that's what I find really interesting.
Yeah, I think that's probably where we're going to see the SEC step in at some future date. They're either going to say, hey, we found intent to manipulate and cash out and leave people hanging, or they're going to say, well, we have found no evidence of this, and therefore we can't find a crime. Yeah, it's good. The intent question is a big one. It's a really good one as far as the, as far as what the repercussions for the social media aspect of this might be.
Yeah, the lines seem very gray. It's going to be a discussion we're going to see quite often in the coming weeks, I imagine. Thank you so much, Nick, for joining us.
Thank you.
All right, that was CoinDesk regulatory reporter Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, let's head over to Hong Kong, where Global Digital Finance, a crypto advocacy group, is warning that the city-state's proposed crypto trading ban on retail investors could drive traders underground. Joining us now to discuss from Hong Kong is Annabelle Huang, partner at Amber Group. Welcome, Annabelle.
Hi guys, thanks for having me.
Good to have you here. All right, Annabelle, so this crypto trading ban on Hong Kong retail investors, what has the response been, and what are the chances this could actually be passed?
Oh, well, I do think SFC is taking a quite active role on regulating crypto-related digital assets after what we've seen with MAS in Singapore, actually. So I do think Singapore is perhaps a bit more progressive in this, and SFC is catching up. And I'm not sure, if they will actually ban retail trading of crypto. With this bull run, we've seen an influx of both institutional and retail investors looking to invest in Bitcoin, either as a store of value, as a macro hedge against inflation under the pandemic backdrop, et cetera, or even just as an opportunity to pick up more yield. And I do think with the validation from high-profile investors, like we've seen last year from Paul Tudor Jones all the way to Elon Musk this year from the States, I don't think Hong Kong as the Asia hub for finance should really take a hard stance on the retail trading of crypto.
Let's move over to mainland China for a moment. So pre-2017, we had data from Chinese exchanges that showed that China was a massive force in driving up Bitcoin's price. But then after 2017, we lost access to a lot of that data. And now China's a little bit of a black box. It's really hard to know how much of global trade is actually happening in China. Do you have a sense of just the role that China is playing in this current crazy bull market? Is China still a massive player, or is it more coming from the US? I know it's really hard to know, but what is your sense?
Yeah, so from sitting in Hong Kong, our client base are quite global, and a lot we service a lot of Asia-based and especially China-based miners and a lot of crypto funds based out of China, and they are actively participating. During the DeFi bloom last summer, a lot of the capital are coming from Chinese-based funds or even retail investors, participating in liquidity mining and yield farming, et cetera. And in this bull run, we do see very active communities within China looking to invest. With the 2017 crypto ban, it is much harder to invest directly with yuan, to buy or sell crypto. But we do see a lot of family offices or high net worth individuals with assets offshore that are actively participating. So we do see a booming crypto market participant in China.
Annabelle, sticking with the mainland, China is developing a digital yuan. Do you think that is really going to decrease the popularity of other financial payments apps like WeChat or Alipay?
It is an interesting question, right? Because here in China, different from what we're used to in the States, perhaps, where we still use credit card and sometimes physical cash. In China, everything, at least payment-wise, is done digitally. We use WeChat, Alipay. I haven't even touched physical cash in a long time, and people don't even want to accept it. And with digital yuan, it's different in a in a sense that it is a digital form of cash. It is not, the money that you put on Alipay. What I mean is that with the digital yuan, essentially it will replace physical cash, and every transaction you do now will be recorded on a blockchain or on, by the government somewhere. So everything you do will be recorded somewhere, whether the commercial apps or, in a government data, yeah.
Over the fall, we had some issues with OKEX suspending withdrawals for several weeks. How much of a concern is it for, say, miners still? Are they worried about future access to the market in a way for them to sell their inventory and get cash out? Is this still a concern, or has that been put past everybody?
It was definitely a shock to the market at that point, and I think the concerns still persist. It is still more difficult especially for miners, to cash out because they have to cover their electricity payments and maintenance costs every month. So for them, it is still a bigger concern. And actually, a lot of them are moving their operations to other countries, even to Western markets like the US, where perhaps it is easier to manage the fiat side.
Could you just tell us quickly what are some of the differences between DeFi in China and DeFi in the US? My impression is that there are some unique characteristics in China. So what are they?
It is an interesting question, actually. I first got involved in crypto back in the States, and I was part of a decentralized exchange built on Ethereum back in the days before the DeFi boom, right? And from my feel, like in the US, most of these DeFi projects are very focused on the technology, on the innovation side of things, versus in China, perhaps it's still a bit more cash flow driven, right? So people like to participate in yield farming, where they can capture higher yields, opportunities, and generate cash flow from there. So I think that's kind of a broader comparison between the Asian markets and the Western markets, where I think it's China, it's Korea, it's Japan, right? I think the investors here are more attracted to yield opportunities.
Awesome. Thank you so much, Annabelle, for joining us. I know we put you through a gauntlet of questions there, but you gave us a good kind of overview of what's happening in Hong Kong.
Yeah, no problem. Nice chatting with you all.
All right, that was Amber Group partner Annabelle Huang in Hong Kong. Time now to check in with crypto Twitter with our tweet of the day. The return of wanted by U.S. authorities BitMEX co-founder Arthur Hayes tweeting "Black is back" by my opening salvo for 2021 just dropped called "Walk Away." I look forward to re-engaging with everyone via fortnightly publications. It's a Bitcoin bull market. If you mess with the bull, you get the horns. Followed by a link to his take on the whole GameStop saga. But what's really interesting are the comments. If you scroll down, Twitter user @LordAshDrake saying, "Bro, shouldn't you be like in jail or something?" The comment section are always a fun read. All right, that's it for First Mover. Coming up on Monday is special guest Blockstack co-founder and CEO Muneeb Ali. Thank you, Emily Parker, our CoinDesk Global Macro Editor, and Lawrence Lewitinn, Markets Managing Editor. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.